But in the thick of earnings, so let's address another set. We've got the earnings fine print out for Mastek. Let's chat with the management. We have Hiral Chandrana, the CEO, joining in on the show right now. Hiral, hi, morning. Good to have you on the show. Seems like the challenges in your core markets of UK and key accounts within the UK public services still persist. When is it that you do see a recovery coming in?
Thanks, Aisha, for having me on the show. Good morning. Maybe a quick recap of our Q1 results since we just announced it yesterday. We reported 20.2% year-on-year constant currency growth compared to last year. Our operating EBITDA is at 17.5%, comfortable, stable, healthy range. And our momentum in terms of pipeline and deals continues to be strong. In the UK, we have lesser number of working days, very specific to the UK this particular quarter in the Q1. So that's something that does impact us in terms of time and materials work. But we had a very strong order booking in the US. And looking ahead, we are optimistic about the prospects going forward for the remaining part of the year. So yeah, I'll sum it up saying that slow start, but looking strong and when it comes to remaining part of FY24.
Your cross-currency growth has been pretty volatile, right from 11% last year to 0.4% this quarter. So what's the outlook in terms of where you see it stabilizing? Do you think that double-digit growth can be seen in FY24, given that in FY23, the cross-currency rate was at about 18.5%?
Yeah, we definitely see that happening. And it's something that we feel confident in terms of beating the industry averages and going a little bit beyond. Market is still volatile. There are still, as you know, macroeconomic challenges. But our exposure to financial services is very minimal. And we also see that customers are asking us to step up and become more strategic, having a seat at the table in more strategic conversations. We've seen some marquee deal conversations where we were not on the table last year. So while there are some overall uncertain times, we're still very confident about the growth prospects. I mean, you heard about the acquisition that we announced yesterday as well. It's a key space that we've been looking at in the data cloud and data modernization space. We believe that's a additional capability that Mastek it'll help complete our overall story from front to back office. We're excited about that going forward as well.
The other thing I also wanted to talk about, Hiral, was your margins, because they were soft this quarter despite not having a wage hike impact. When is it that you see the margins headed to the higher end of, say, 17 to 19% of a range?
Yeah, so Aisha, I mean, we actually did do a wage hike for one part of our business. This is the part of the business that we acquired last year. We wanted to maintain that cycle for that part of the business. So it was not a full Mastek-wide hike, but it was for that specific part of the business. So that did impact margins, but we offset that through some of the efficiencies. And this is the range that we feel comfortable, like you said, 17 to 19%. We're running three tracks, right? There is a growth track where we continue to make progress on account mining, larger transactions, looking at executing on our strategy, industry-specific, market-specific. But there's another track, which is continuous optimization of our operating model. And that will continue to make sure that we operate more efficiently, deliver more efficiently, so that we can then move to the third track, which is fund and continue to fund new investment areas, including some non-linear platforms that we're building. Generative AI, as you know, has taken off in a big way, but we're taking a very practical approach of very industry-specific use cases, whether it's manufacturing, whether it's retail, whether it's combining now with the BizAnalytica acquisition, so that it forms a foundation to lead to more analytics and more predictive modeling.
What is the outlook when it comes to, your internals? The DSO days have gone up, headcount is down. Do we take all of these indicators of ramp downs and renegotiations by the clients?
No, actually, we have a significant business in the Middle East, as you know, and that market does have some cycles when it comes to DSO and collections. Having said that, the team is doing a great job in making sure that we go account by account. In fact, we're being even selective on what accounts we work with in some of the geographies. So we believe that DSO will continue to go down, and it'll help obviously margins and cash flows as well. But if you break up our overall business, our UK public sector, where we're still working in some very critical programs, digital identity. We just won a deal last week in the one login space, which is kind of equivalent to the Aadhaar card in India. We are working with the police protection program. We're working with borders and immigration. We continue to work with the health sector. So we feel that business will continue to be stable. Like I said earlier, our US business in terms of order booking has really picked up in the last few months. So we expect that to reflect in quarter-on-quarter revenue growth in the coming quarters, starting with Q2. And Middle East is a good kind of balancing act for us. It comes with some growth prospects, but it also comes with some margin challenges. We just had to sort of balance out the overall portfolio from that perspective.
Appreciate your time. Thank you so much for joining in and giving us that view. So as of now, confident about growth prospects, comfortably in the 17 to 19% margin range is what the Mastek management is confident of. The stock is well a buzz in today's trade at 22.17.